Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about the 6 monthly equity dividend ETFs that we have for European investors right now on our stock markets. So we had JEPG, SDIV, XYLF and QYLD, but now we also have JEPI and JEPQ from JP Morgan. So before we only had the 3 monthly payers from Global X, one being the Global ETF SDIV, the Global X Superdividend ETF, and you see you also have the names, the ticker symbols SDIV and UDIV. It's a problem in Europe that all the ETFs they have multiple ticker symbols. I don't like that at all, but it's the way it is. So on the slides that I have on the ETFs, I will always write the ISIN code as well. So later on, you will see the ISIN code for the SDIV ETF. And the Global X Super Dividend ETF, that is the only ETF that pays monthly dividends that is only invested into stocks and doesn't work with options to get additional income from the option premiums. And then you have the two ETFs that invest in the USA from Global X, and that is the XYLF, the Global X S&P 500 covered call ETF, and the QYLD, the Global X Nasdaq 100 covered call ETF. And now JP Morgan has three as well, just like Global X. They already had the global ETF JEPG that is almost around for a year now, and that's the JP Morgan Global Equity Premium Income ETF. And now they added recently the two ETFs that invest in the USA. So you have the JEPI, the JP Morgan US Equity Premium Income Active ETF, and that is actually following the S&P 500. And you have the JEPQ, the JP Morgan Nasdaq Equity Premium Income Active, and that one is following the Nasdaq 100. They are both made on the 29th of October of 2024, and they started with a asset value of $25, and they started trading on Wednesday the 6th, and they are available in Austria, Belgium, Croatia, Denmark, Finland, France, Germany, Ireland, Liechtenstein, Luxembourg, the Netherlands, Norway, Portugal, Spain, Sweden, Switzerland and UK. So far they haven't applied for admission in Peru yet. They did that for JEPG, but so far it isn't noted on their website, so these ETFs aren't available yet in Peru for people that are interested and follow my channel in Peru. I don't know whether or not people follow me from Peru, but I'm just mentioning it for completeness. So JEPG, another thing that is quite interesting. So normally I always say it's US dollar, and it's currently 27.27 US dollar on the SIX stock exchange. But since the 7th of August of 2024, so this year, we also here in Switzerland have the option on the SIX stock exchange to buy this one in Swiss francs. So that's really nice from JP Morgan that they think about that. So now maybe I'm considering to buy the JEPG in on my Swiss quote account as well. But yeah, so far we are just sticking to our ETF portfolio strategy, and I'm not going to change anything just yet. But it's really interesting that it's now available in Swiss francs as well. The dividends are being paid out in US dollar. There are 250 holdings in this ETF. There is $338 million invested into this ETF, and it's a fully replicated type ETF. Since its inception, and we still need to wait a month and a few days till it's around for a whole year. Since its inception, it is up 14%, and this is in Swiss francs, so all the performance that you will see will be in Swiss francs. And in US dollar, it is up 14.60%. So if you track your portfolio and you bought it in US dollar, you will see that it is up more than I put here, but that's just because that one is in Swiss francs. And all the global X dividends ETFs are written in Swiss francs on the SIX stock exchange. So I want to compare performance-wise apples to apples, and that's why I put the performance of the JP Morgan ETFs also in Swiss francs. So they pay out 12 dividends per year, and so far, yeah, I am estimated the dividend yield to be 6.74% for the whole year, because so far we only had 11 dividends being paid out. And a crazy thing about the dividends from JP Morgan is that they take almost a month to hit your account. So you see the X coupon date is the 10th of October and the payment date is then the 7th of November. So if you buy it, just know that you have to wait a bit longer than a month before you see your first dividend hitting your account. After that, it will be every month again, but don't be surprised when the first month and a half, for example, if you buy just after the X coupon date, for example here, if you bought on the 10th of May, you will only have a dividend coming in on the 8th of July. So that's 2 months that you have to wait for a monthly dividend ETF. That's a bit strange, but it's the way it is. And then you have the investment strategy. So they work with option premiums as well, and they don't say how much the equity part is and how much their option part is, and it's going to be around 70 to 80%, but it's not noted in their investment strategy. So if you want to read this, you can pause the video here and go over it, but you can also go to the European site of JP Morgan Asset Management, look up the easing code for the fund, and there tick on the on the fact sheet of the ETF, and there you will see the investment strategy. Then you have the new one, JEPI, so only been around for 3 days. The total expense ratio also being 0.35%. In US dollar right now, 25.475. And the dividends will be paid out in US dollar as well. It tracks the S&P 500, so there will be 500 holdings into this ETF. And there is already 20 million invested into this ETF. JEPI is a well-known ETF in the US, and a lot of people here in Europe were waiting for JP Morgan to start the JEPI here in Europe as well. So it's not abnormal that a lot of money is flowing towards JEPI immediately in the first week that it's around. And I think it's going to go up quite fast as well. It's a fully replicated type, and since its inception, it's a bit crazy that I noted it for only 3 days, but it's 3.77%. And yeah, the last week it was crazy on the American stock market, but that's just because of the American elections, where the president that is elected was known really fast, and stock markets don't like uncertainty, certainly not about the US president that needs to be elected. And with that out of the way, the stocks started rising like crazy. So it's going to pay out 12 dividends per year, and this is the investment strategy. And in short, I just wrote it in short like this. So 67%, it's 2/3 equity portfolio that's going to invest into the 500 stocks of the S&P 500, and the rest is going to be invested into equity calls or equity index calls, options, and this will deliver extra income from the premiums of the options being written out. So you have the dividends from the equity part, the 2/3, and on top of that the premiums from the options coming in, and this will deliver a higher dividend yield than just being invested into stocks. Then you have JEPQ, the JP Morgan Nasdaq Equity Premium Income Active Usage ETF. Also total expense ratio of 0.35%. Momentarily a little bit more expensive than the JEPI with 25.485, but the Nasdaq is always rising a bit more than the S&P 500 because you have more technology there, and technology is in right now, so it's not abnormal that it's 1 cent more expensive than the JEPI. There are going to be 100 holdings into this ETF. There is also already $20 million invested into this one, fully replicated type, and in the 3 days that it's being traded, it is up 2.50%. 12 dividends per year you can expect, and just the same investment strategy as for the JEPI, so 2/3 equity portfolio and 1/3 used for writing option calls for additional income, which will deliver then a higher dividend yield than just being invested 100% into the Nasdaq 100. And then the 3 ETFs from Global X. So the first one, the Superdividend Usage ETF US dollar distributing. Total expense ratio of the Global X ETFs always 0.10% more expensive than the JP Morgan ones, 0.45% here. So always noted in Swiss francs. That's why the performances are given in Swiss francs for the ones from JP Morgan as well. So 7.935 right now on the SIX stock exchange. The dividends are being paid out in US dollar. There are 96 holdings right now in this ETF, $186 million invested into this ETF, and it's a fully replicated type. The last year it is actually performing quite nice, 14.29% up, but since its inception it's still down 23% and a half. So that's not great, and yeah, I also have a bit of a problem with SDIV. In my earlier videos on the channel, you hear me say that SDIV is actually a dividend trap, and I will get around that later on this slide, but yeah, it's paying out 12 dividends per year, and this year the dividend yield is 11% so far, so the trailing 12 month is 11%. And these are the dividends being paid out, and here you can see the X date is the 4th of January. The record date is then the 11th of January, a week later, and the next day the dividend is already hitting your account. So only 1 week and a day it takes for the dividend to hit your account. So that's 3.5 weeks, 3 weeks sooner than the ones from the JEPG ETF from JP Morgan. And here you can see the investment strategy of the Superdividend ETF from Global X. And what I don't like is that they try to find dividend stocks that pay out at least 6% and not more than 20%. So the dividend needs to be between 6 and 20% in order for a stock to be able to be taken up in the ETF. And when it wants to remain in the ETF, it needs to have at least still 3%. So for example, a stock, it has a dividend of 9% and it is trading up and up and up and up, and the dividend falls to 5%, then that stock will remain in the ETF. But if it drops more and the dividend yield drops more, so if the stock rises even higher in price and the dividend yield drops more, then yeah, you have the problem that you miss a lot of the gains that the stock is making. And on the other hand, of course, they can stop paying dividends, but here you see the companies must not officially announce that the dividend payments will be cancelled or significantly reduced in the future. So that's also a problem. So it can be taken up because they say that it's going to be 9% or they think it's going to be 9%, and then later they cancel the dividend, and then it's in the ETF, and the rebalancing is only after February, after May, August, and November on a rolling 5-day period. So I really don't like this ETF, and it's only if, it's not financial advice that I give. It's only my opinion that I give, but I'm not putting money into SDIV for sure. Then you have XYLF, and here it's a global X ETF where my wife and I do put our money towards because it's in our ETF portfolio. So total expense ratio of 0.45%. The current price on the 6 is 13.75 Swiss francs. The dividends are being paid out in US dollar. It has 500 companies because it tracks the S&P 500. There is 37 million invested into this ETF. Then the replication type, it's always mentioned that it's a swap type, but I have a problem with that, and I will get to that later. It's up 17.30% in the last year, and since its inception, so it's been around 1 year and 4 months, and since its inception it is up 16.35%, so that's not bad at all. The dividends per year, yeah, monthly, and the dividend yield currently is 8.37%. And these are the dividends being paid out, and here you can see the X date is the 11th, the record date is the day after, and then 6 days later, a week later, the dividend hits your account. So once again, around 1 week that you have to wait to receive the dividend into your account, compared to JP Morgan where you have to wait almost a month. Yeah, that's it's a difference, but in the end you will always receive your dividend, of course. And here is the investment strategy, and that's why I have a little bit of a trouble with the replication type being swap, because 50%, here they say that you have the index component and the short call option component. They are held in equal notional amounts. So, okay, it's notional, and it's tracking the, how do you say it? It's tracking the performance. So they don't actually have the stocks themselves. But it's 50% that is actually invested into the S&P 500 index. And then you have the covered call option component. So it's not 1/3, it's the half of your ETF that is in the covered call option component. And this is giving you premiums as well. And that's why your dividend yield is higher than just investing into the S&P 500. So it's 8.37%. And then we have the final one, QYLD, the Nasdaq 100 covered call from Global X. Total expense ratio of 0.45%. Swiss francs right now 15.13 on the SIX stock exchange. Dividends being paid out in US dollar. So Nasdaq 100, it invests then in 100 stocks, of course. There is already $286 million invested in the QYLD. Now I think it's going to lose a bit of its investors because they are going to shift to JEPQ probably. It's to see how high the dividend yield is going to be from JEPQ. But yeah, the swap indication, it's a bit annoying, of course. But yeah, it's a synthetic one, just like the XYLF. But still, here as well, half of your invested money is put towards a tracker that follows the Nasdaq 100. So the past year it is up 18.80%, and since its inception it is up almost 31%. And the dividend yield right now is 11.11%, and here you can see the dividends of this year, and once again just the same thing. It takes more or less a week before the dividend hits your account. And here the investment strategy is just the same thing. You also have the Nasdaq 100 index component, and that one is held in equal notional amounts compared to the cover call option component. And from this component you receive the income premiums, and from this part you receive the normal dividends. So overview of the discussed ETFs. So you have the global one from JP Morgan with a dividend yield of 6.74%. Since its inception, it is up 13.99%, but that's almost 1 year. It's just 1 month less. So you can see that it's more or less comparable, the 1 year performance for both global ETFs. But SDIV, since its inception, because the investment strategy, I don't really like it. It's a bit dangerous. If they include stocks, it can go either way with the selection criteria of having a dividend between 6 and 20%. I really don't understand that, but that's another thing, of course. Then you have the two ETFs on the S&P 500, the JEPI and the XYLF. Of course, you don't have a lot to go on for the JEPI and also for the Nasdaq 100 JEPQ. You don't have a lot to go on right now. It's just an announcement, and they are only trading for three days now. And also here, just pay attention. The performances, they are in Swiss francs, and the dividend yields, they are all in US dollar compared to their current price. So it's just for comparison reasons that I did that. And with that being said, thank you for your attention, and see you on the next one on my YouTube channel. Bye.